Welcome to Hot Stock Pick of the Week on TFNFinancialNews.com. I'm Ann Sosnowski. Now you see this company's trucks all around cities and suburban areas. Headquartered in Houston, Texas, Sysco, ticker symbol SYY, is the leading distributor of supplies to the food service industry. It distributes food everywhere to restaurants, colleges, baseball parks, cruise ships, and even hospitals. Sysco is an acronym meaning Systems and Services Company. Revenues for Sysco have increased by a whopping 25,986% since its stock IPO'd in 1970, when the company made annual sales of $115 million. Today, the company brings in over $30 billion per year. CEO Richard Snyders plans to continue his company's acquiring ways. He has reportedly paid $43 million so far in 2007 to buy more specialty food producers as well as a distributor. Now, although you don't hear much in the news about Sysco, it is no doubt one of the kings of inorganic growth. They have a knack for acquiring other food service companies in their sector and increasing its own bottom line. Sysco's gobble-up business strategy has pushed the food distributor's sales to $33.9 billion in 2006, a gain of 7.8% in only 1 year. That's why Sysco is one of my favorite and safest plays for the current merger and acquisition trend in the market. This is where much of its growth comes from and where its success lies. Now, the most important aspect to remember about a company that acquires others is that its stock is usually the loser in the short-term aftermath of the deal. But that's just in the short term. Once acquisition companies announce their sales and revenue increases from their acquisitions, the worth of the deals are officially tallied and the acquiring company's stock is bought up. Sysco has quietly purchased 14 companies in 3 years and expects to make even more deals to increase its bottom line. These acquisitions include fresh fruit and vegetable companies, meat and seafood distributors, broadline food service distributors, and some independent produce distributors like International Food Group, which helped the company branch into areas like Europe, Asia, and Central America. Sysco's revenue shows the advantage that this business plan brings to the table. The company's total revenue has increased from $29.3 billion in 2004 to $32.6 billion in 2006, a gain of 11% in only 2 years. At a large market cap of $20.45 billion, this company continues to perform well. While its profit margin is low at 2.61%, its return on equity is high at 30.81%, and its return on assets is 11.73%. Quarterly earnings growth for Sysco is exceptionally strong at 15.20%. And as a kicker, and great for Sysco shareholders, the company has had 150 consistent quarterly dividends, a good value perk for investors. In its most recent earnings release for the second quarter of 2007, Sysco saw net earnings increase by 15.9%. Now, not only are Sysco's financials and acquisition activity a great reason to buy it right now, but the company's chart technicals are extremely strong. The company's stock just finished the falling leg of its most recent rising cycle and is finding support at its bottom trend line. The stock's momentum is positive and rising, and its 200-day moving average is about to provide solid support. Overall, the company itself shows great promise in its continuing return of dividends to shareholders and its continued acquisition of competing companies to gain more than a 14% foothold in the food service industry. Now, from its current price of $33.10 per share, I expect $40 per share in the next year and $60 per share in the next 3. That's a good longer-term gain of 79%. To play the strength of a solid company that's making inorganic growth work for it as it gobbles up its competition, pick up shares of Sysco Core, ticker symbol SYY, at its current price. I would advise placing a 20% stop loss from your entry point for protective purposes. For TFNFinancialNews.com, I'm Ann Sosnowski.